We do begin with our talk of the tape, all that lies ahead this week with mega cap earnings, the Fed decision, and so much more looming large. Let's welcome in Solus's Dan Greenhaus and iCapital's Sonali Basak. It's great to have you both with us. Dan Greenhaus, you first. This is a resilient rally. This likes any positive headline. It's getting on trade, and it thinks it's going to get good stuff from the mega caps. How much is actually riding on what happens this week?
Yeah, so for viewers who watched the halftime show, you saw Joe Terranova say something that was demonstrably false, which was that this market can withstand a disappointing series of results from Mag 7. I totally disagree. Joe is the best, but I think he's dead wrong. When you look at how important this trade is to the market, the mega cap names, forget Tesla, but let's include Broadcom instead. That's like about a third of market cap in the S&P 500. But when you add in everything else, Trane Technologies, and GE Vernova, et cetera, you get up to somewhere around 43, 44% of the S&P 500. I could be off by a little bit, but that's how important this trade is to the whole market. And I totally disagree. If something goes wrong with this story, which I don't think is what's going to happen, but if something were to go wrong for the story, I think it would be a big problem for the markets in general.
Yeah, do you agree with that? Because, I mean, obviously, when Joe made the statement that he did, he pointed to the fact that there was all of this other stuff that's good. Now, he also wasn't making the point that these could have a misstep in the market. The rally's just completely over because it would be bought if these stocks pulled back at all. But honestly, what do you think is really riding on this week?
Well, look at the numbers themselves. The expectations for the Mag 7 is a 14.5% rise on average. We've seen over the last couple of years 35%. So coming into Wednesday, Thursday, that seems very low relative to what we've seen before. CapEx spending is going to expected to be coming in at $105 billion across the group. There could be a little bit of upside to that, actually, if you think about how much catch-up there is to play for Apple and Amazon in particular. And think about valuations alone. People are talking about Apple's near record high, but Apple is up, what, 6-7% this year so far? So there's a lot of room still, and you look at the earnings beats. Almost 90% of the companies that have reported already have beat. Now, they haven't been rewarded at a significant margin in the trade, but with that said, optimism and sentiment is not overly stretched heading into this report either.
You think the bar is pretty low for these mega caps coming in, or is it high? I mean, I don't even know how to judge that.
Sure. It's
not like the stocks have gone crazy of late.
Well, so, I mean, Nvidia's up 40% or something for the year.
Yeah, if you bracket out, it looks amazing, but they have been a little choppy at times.
Absolutely, and Apple, as we know, I think Sonali hit the nail on the head. I mean, the growth rates for these stocks have been coming down now for some time. That's not a new story. Coming into the year, you'll remember a lot of us were on TV saying the growth rate was going to slow for the Mag 7 and accelerate for everyone else, and that is undoubtedly playing out. So I don't think that from that standpoint, sentiment is too high. And when you look at the positioning data from the sell side in terms of exposure to the Mag 7 and the technology trade in general, obviously everybody's exposed. But it doesn't appear to me, reading the data, that they are overexposed. So no, I don't think the bar is too high. But again, to the earlier comment, if there is a disappointment, if there is a letdown, it's going to be a problem for the market.
Yeah, I mean, it's going to. The market's going to have to adjust to the fact that so much of the optimism is around CapEx.
Yes.
From the hyperscalers.
That is a big part of this, but I would even look at broader parts of the market as well. Look at financials, for example. EPS growth came in at more than 20%, and the expectation had been roughly 13%. And you look at the trade through October, Scott, take a look at it. It's still non-profitable names. It's still the Goldman most shorted basket that is seeing double-digit percentage returns through the month. This has not been a set of buying on fundamentals, which is what we would welcome back to this market, actually. We've seen a little bit of that turnaround in recent weeks, but if people are buying these names on optimism that earnings will grow, that's a better sign than some of what we've been seeing.
Do we even care about specifics around China-U.S. trade, or are we just good enough with just getting it off of the boiling point to some degree?
That's a great question. Listen, I think we care about the specifics, but to a point I've been making for a couple of quarters, all you're really concerned with is that worst case outcomes and worst case headlines don't come to pass. Another 100% tariff on this, a 20% tariff on that. I think that's probably just my anecdotal conversations around the street. I think that's what people care about the most. Everyone's gotten their head around the idea that tariffs are going to go up to the extent that that raises prices. I think everybody has gotten their head around that. Obviously, I still think there's some more effect of that over the next 6 to 9 months. But I think it's less about the specifics and more about the trend. And as long as the trend isn't getting worse, which this may come back to bite me, but I don't think it's getting worse, that's probably good enough. And mind you, with the market at a record high, it's telling you that's the case.